This step we make to enter the transaction into the account. For example, in the capital account, we have two sides, namely the debit side on the left and credit on the right. In both parts, there must be a date, detail, and amount. The way to fill it is by referring to the general journal we have created. For example, the capital account shows the credit on the right, so we only put the detail on the credit side, such as the date is 10 October, the detail are cash, and the amount is 60,000 ringgit. The same goes for other account. Next, in our account, you can see the balance BD and CD. How to get the total balance BD and CD is, for example, in the cash account, we must total the amount in both parts. After that, we will get different amount. We must make both parts have the same amount. The way is that we must minus both the amount and the amount that we can make as balance CD. The total balance CD when added will be the same amount on the debit side. So the debit side will automatically balance BD will be the same as the balance CD, but at different date because the balance CD is carried down and the balance BD is broke down. Besides that, if an account like this is very easy, we just need to make the total amount as balance CD and BD as in the table as well as other account.
Okay, we continue with the trial balance sheet at 31 October 2019. The trial balance sheet is how to get the amount. We'll see the ledger. From the ledger, we post to trial balance sheet. Firstly, capital. The capital is set in credit 60,000. Second, cash. Cash set debit 34,900. Next, bank. Bank set in debit total 15,000. Next is sale. Sale is set is credit 31,000. Next, furniture is set is debit 10,000. Percentage 45,000 is set debit. And B and sin and cook set credit 25,000. Return inward set credit debit 2,000. And the stationery set debit 1,000. Zahid Khan is set credit debit 30,000. And model furniture the set is credit 10,000. Batrat stationery is set credit 1,000. And net is machinery set debit 6,000. Net drawing the set debit 3,000. Net the interest is set debit to 2,000. Of office expenses the set debit 10,000. And electric bill the set credit debit 100. And last commercial the set credit 5,000. Total set debit and credit is 132,000.
Assalamualaikum. My name is Nur Hairunisa binti Hairunizam. My number matric is H281618. I will explain about profit and loss account for the year 31 October 2020. On 1 November 2020, sales of this business is 31,000. Sales return on 20 October 2020, that is 2,000 ringgit Malaysia. On the net sales, we get 29,000. In cost of goods sold, we have opening stock and purchases. For opening stock, we state 0 because this company doesn't have doing any orders. And purchases is 45,000. After net sales minus with net purchases, we get gross loss, that is 16,000. For revenue, we receive about 5,000 as a commission. After we have count between gross loss and revenue, we got the total revenue is 11,000. In expenses, we have interest with 2,000 ringgit Malaysia. Office expenses is 10,000 ringgit Malaysia and electricity bill 100 ringgit Malaysia. The total is 12,100 ringgit. After we have subtract the amount of total revenue and total expenses, we got net loss, that is 23,100 ringgit Malaysia. The reason why this company get net loss is the purchases is higher than sales. So we will improve this business by doing many of promotion. Now I will explain about the usefulness of statement of profit and loss. A profit and loss statement, otherwise known as a profit and loss or income statement, is a document that measures and reports a company's expenses and revenue during a specific period of time. This shows a company's financial status progress during the time surveyed. The statement details a company's ability to create profit by driving revenue, cutting costs, or a mix of two. The statement details categories of revenues and expenses, which include net sales, cost of goods sold, selling and administrative expenses, gross margin, and net profit. Companies can easily prepare a profit and loss using accounting software such as QuickBooks. This should be one consistently to understand if you are making money profit or losing money loss and why. Determines how profitable a company is over a period of time. If a business revenue are greater than its expenses, the statement shows a net profit. Otherwise, a net loss is shown. In essence, it determines whether or not a company has profit over a certain period. The profit and loss statement provides a summary of your revenue minus expenses for a specific period of time, such as a month, quarter, or year. It provides your bottom lines net profit and net loss. The profit and loss report referred to by other names such as the profit and loss statement, income statement, statement of earning, and statement of operation. An accrual basic profit and loss statement is a better indicator of profitability than cash flow because it includes revenue and expenses that you are either owed or owe, regardless of whether cash has exchanged hands. For instance, your net income is reduced by materials used in particular job. Even if you have not paid for the materials yet, this provides a much better matching of revenue and expenses than looking at cash flow.
Hi, Assalamualaikum. My name is Tinaja Ashikin binti Muhammad Syamsuddin. My matric number is #20A1777. So today I'm going to present about the balance sheet and usefulness of the balance sheet statement. A balance sheet statement is a financial statement that summarizes everything your company owns and owes at the end of the period. The first section details what the company owns, known as the company's assets. Assets include things like cash, bank accounts, accounts receivable, investments, inventory, building, and equipment. The value of the asset shown on the balance sheet is called their look value and is often different from the fair market value of the asset. The second section of the balance sheet lists everything your company owes, known as liabilities. The company liabilities are things like accounts payable, credit card debt, car loans, and mortgages. The last section of the balance sheet is the owner's equity, which equals assets minus liabilities. Since the assets are not presented at their fair market value, the owner's equity section should not be interpreted as the fair market value of the company. The balance sheet is important because it gives insight into the net worth of the business. While most assets are not presented at their fair market value, the list of assets still provides considerable information about what the business owns and is the starting point for determining the fair market value of your company. The value of liabilities on the balance sheet is a good measure of what your company owns and is subtracted from estimate fair market value of assets to determine your company's net worth. That's all for me. And thank you for listening. I hope you enjoy it. Thank you.
In conclusion, we should have a clearer idea of the context in which accounting is set. We also should be aware that accounting is the recording and processing of data into information, of the characteristic of good information, and of the relationship between accounting and organizational objectives. Without proper accounting, it would be very difficult for a business to calculate such as journals, ledger, trial balance, statement of profit and loss, and balance sheet statement. There is another conclusion of journal, general ledger, trial balance, profit and loss, and balance sheet. Journal or book of original entry is the place where journal entries are recorded before they are posted to the ledger account. A journal is a record of all the transactions a company has recorded. Companies use many different types of journal to record their transactions, like the sales journal, cash receipt journal, and the account payable journal. A general ledger account is an account used to store balance sheet and income statement transactions such as cash and inventory. Ledger are accounts prepared for bringing all entries related to individual particular account under the same account. This is where the need of journal entries is the most, so that they can be posted to ledger account. Trial balance is a list of closing balance of ledger account on a certain date, and it is the first step towards the preparation of financial statements. It is usually prepared at the end of an accounting period to assist in the drafting of financial statement. The next conclusion is about statement of profit and loss. Profit is our incentive for being in business. Without profit, we will lose interest and after a while will not bother. Profit is our reward for taking the risk to be in business. One should understand that generally speaking, the higher the risk, the higher the reward, and the lower the low risk, the lower the reward. It is true that nobody will take any risk without a suitable reward in return for taking the risk.